The US-China trade war escalated dramatically as President Trump announced a new wave of tariffs on Chinese goods. These new tariffs added an additional 34% to existing rates, bringing the total tariff increase for the year to a staggering 54%. The move sent shockwaves through the global economy, as investors and businesses alike braced themselves for the inevitable fallout. The tariffs targeted a wide range of Chinese imports, covering everything from electronics to textiles. The administration argued that these measures were necessary, claiming they were protecting American jobs and intellectual property. However, critics argued that the tariffs would ultimately harm American consumers and businesses, fearing it would lead to higher prices and reduced competition. The timing of the tariffs raised eyebrows, coming amidst already strained relations between the two superpowers over issues such as Taiwan, human rights, and the ongoing trade war. Many analysts saw this move as a sign of the US taking a more aggressive stance towards China, further fueling concerns about a potential decoupling of the world's two largest economies. The move immediately drew condemnation from various corners of the international community. The European Union and Japan expressed their concerns, worried about the impact on the global trading system. The World Trade Organization also voiced its disapproval, warning of the dangers of protectionist policies. China wasted no time in responding to the US tariffs, announcing retaliatory tariffs of its own. These tariffs matched the 34% imposed by the US and targeted a range of American goods, including key exports like soybeans and automobiles. This tit-for-tat response signaled China's resolve. It was not going to back down from a trade war. In addition to the tariffs, China also implemented new export controls targeting rare earth materials, which are crucial for many high-tech industries. This move was widely seen as a strategic maneuver, aiming to exploit the US's reliance on China for these vital resources. The Chinese government accused the US of protectionism and bullying, arguing that the tariffs violated international trade rules. China vowed to defend its interests, pledging to take all necessary measures to protect its economy. The speed and severity of China's response underscored the high stakes involved. Both sides seemed locked in a dangerous game of chicken, neither appearing willing to back down, raising fears of a protracted and damaging trade war. The reaction from global markets to the escalating trade war was swift and brutal. Stock markets around the world tumbled as investors panicked, selling off their holdings and seeking safe havens. The S&P 500, a key indicator of the US stock market's health, experienced its worst week since the COVID-19 pandemic, plunging by a staggering 9% and wiping out trillions of dollars in value. The market's negative response reflected growing fears about the impact of the trade war on the global economy. Businesses and investors alike were left reeling, uncertain about the future. The tariffs threatened to disrupt global supply chains, raise prices for consumers, and dampen economic growth. China's foreign ministry was quick to point out the market's reaction, using it as evidence that the tariffs were harmful and counterproductive. Spokesperson Guo Jiakun took to social media platforms including Facebook to highlight the negative market response. He reiterated China's stance that the market has spoken against the tariffs and called for equal-footed consultation to resolve the dispute. The market's verdict was clear. The trade war was bad for business, bad for investors, and bad for the global economy. The escalating trade war carried with it the very real risk of broader economic consequences. Economists warned of a potential recession in the United States, arguing that the tariffs would fuel inflation, raise prices for consumers, and stifle business investment. The uncertainty surrounding the trade war was already having a chilling effect on business confidence. Various Chinese industry associations echoed these concerns, calling for unity and urging businesses to explore new markets. The healthcare industry, the textiles industry, the electronics industry, the food traders, the metals industry, and the chemicals industry all issued statements warning of the potential for increased US inflation and recession risks. They stressed the importance of diversification and finding alternative markets to mitigate the impact of the tariffs. Despite the market turmoil and warnings from economists, President Trump remained resolute. He refused to reverse course on the tariffs, doubling down on his stance and arguing that the tariffs were necessary to protect American interests. He dismissed concerns about a recession, claiming that the US economy was strong enough to weather the storm. The president's unwavering stance did little to calm the nerves of investors and businesses. The uncertainty surrounding the trade war continued to cast a long shadow over the global economy, with the risk of a full-blown trade war and all its negative consequences looming large. Looking for deeper stock market insights? Subscribe to our YouTube channel for real-time updates, expert analysis, and the latest market trends.